Hi there, welcome back. Thanks so much for still staying tuned to Market Cafe. You're watching ET now. Let's talk about India's GDP because that has surpassed all expectations and stood at 7.8% in Q4 FY24. And it is to be noted that these figures surpass the RBI's estimate of 7% according to projections made in its April monetary policy review. The full year 2023-24 GDP has been revised upwards to 8.2% from the second advance estimate of 7.6%. And the real GVA has been estimated to grow by 6.3% in Q4 FY24. What are the factors which have led to this strong growth? My colleague Prakash Priyadarshi joins us with an explainer on just this. Prakash, good morning. Take it away.
Yes, it's a positive development for the Indian economy, which seems to be growing provisionally at 8.2% in the financial year 2024. That also reflects the resilience of the Indian economy, and that shows that the Indian economy has been fastest growing major economy in the financial year 2024. Rural demand has picked up as compared to urban demand. Sufficient availability of fertilizer and increased tractor sales have maintained the growth momentum as far as rural economy is concerned. Sources are informing that the growth prospects appear to be bright. As far as Indian economy is concerned, the external factors pose a downside risk. Along with that, credit growth seems to be on upward trajectory. Domestic economic activity remains resilient, and the government is expecting the agriculture growth to be higher during financial year 2025 as compared to FY24. Along with that, when it comes to trade, the government is expecting that the strategic trade agreements like India and EFTA trade partnership shows India's commitments to expanding its global trade footprints. When it comes to a risk factor associated with the Indian economy going forward, sources are informing that the geopolitical tension pose downside risk to the Indian economy. Along with that, divergence of monetary easing paths of major central banks add to policy uncertainty going forward during current financial year. When it comes to food prices, which is one of the risk factor to the Indian economy, food prices at international and domestic level is posing risk to the Indian economy. However, government and central banks are taking all possible steps to mitigate this risk going forward. Along with that, elevated financial market valuations globally, particularly in US, and possible spillover effect on the Indian markets, what the sources are indicating. Last but not the least, the sources are also indicating that the impacts on sentiment and the households' finance due to rising retail exposure to stocks through FNO, one of the major concern for the Indian economy going forward, which needs to be addressed.
All right, thanks Prakash for that update coming in. Meanwhile, during an exclusive interview to ET Now earlier in March, RBI Governor Shaktikanta Das also showed confidence and said that GDP number for financial year 24 could be very close to 8%. Listen in to what he had to say as well.
To say that there is every possibility of the 7.6% growth for the current year being exceeded. I think there is quite a good chance of the growth GDP number for the current year being very close to 8%. Now coming to next year, we have given a growth projection of 7%. Other forecasters, including international agencies, have given much lower projections for next year. For next year, we stick to 7%.
All right, well, let's move on.
If you like this video, then like, share and subscribe to ET Now.